Right, the weekly stock market update, quite a detailed one and an important one. Let's get into it because it is such an important week. There we go. And what do we see first things first? Well, it's an expensive market. Now imagine you had a business and it made $1 in profit every year. And I said, I'll buy that business for $104. You probably would take my arm off, wouldn't you? Well, that's what the Amazon share price indicates. That's a price earnings multiple. It's what it means. But should you be paying $104 for $1 in profits? Obviously not. Microsoft, should you be paying $33 for $1 in profit? Obviously not. Unless they're Amazon and Microsoft or Apple or Alphabet that you're buying. Okay, so the point is you can't just use conventional price earnings analysis to determine these things. So let's now go to how these companies have done over the past week. Well, if you wanted the excuse of expense, that these companies are all too expensive, and that's why there should be a sell-off. Well, we've got that, haven't we? Because we can see here that in actual fact, the market then rebounded. So it had its excuse of valuation and then decided the excuse isn't that great. And maybe it'll return to the excuse to sell off some more. Let's investigate that in a second. Before we do, price earnings growth ratio. Now, this is where you say, well, okay, Amazon's making a profit or your shop makes a profit of $1. I'll pay 104 because I expect next year to make $2 and the year after 4 and maybe in 10 years, $50. So I'll pay 104 now to own the company. That's what price earnings growth ratios are trying to capture. And a factor below 1 means it's undervalued. Very few companies fit that. How have we done so far this year? What's the performance been like of the markets? Well, I'll tell you, 35% up on the NASDAQ is not bad at all, is it? And up 14% on the S&P, not a typical year, but we've got a bit spoilt with those numbers. And the danger with that now is, having got spoilt, we think the markets can only go in one direction. And when we in actual fact look at them, and then we see these massive fat falls that we've had and everyone gets a bit of a heart attack. Certainly Michael Burry gets a heart attack and Jeremy Grantham does as well. You see those falls. Well, actually, what is going on? Unless, and here's a little clue I'm going to give you as to what's going on, unless both the weekly MACD, which is a measure of momentum, and there are others if you wish, go and pull your Elliots and your Fibonacci's out if you wish, or just look at seasonality if you wish. And the monthly MACD, unless they're both falling, then generally, unless they're both falling as they were here, these falls are not prolonged. Okay, where only one of them is falling, like for instance here, but the other one is either flat or rising, so they're divergent, then the falls are short-lived and you resume upwards. And at the moment, I can't guarantee you what's going to happen, but it certainly looks like the falls will be short-lived. In other words, I'm not saying we've hit the bottom, might still fall before somebody has a heart attack and says, it's the 25th of August, don't you know the market's falling? But what I'm saying is I don't anticipate this being all the way down to here. Probably not even down to there. Somewhere to here and then back up. Maybe not a V shape, maybe more a gradual incline up, but I don't see sharp falls going forward. Now, I've said for a while now for the FTSE, I'm expecting it to do this, and indeed it has done that. There are many other momentum indicators I could have used. I'm just using simple textbook-based ones for you here. Right? Apple. Now, let's look at some of the bellwethers. Fallen off. Is that the end of it? Should you buy? Is it going to be a V-shaped recovery? That's what you want to know. Well, I don't think it's quite the end of it because this hasn't bottomed out. However, this is sideways, so I think it'll be a shallow fall before you get more of a resumption upwards. But that resumption may come in October because September tends to be a pretty bad month. And certainly the banks all seem to agree with me, okay, on that one. So would I buy more today? Well, if I was in a rush, yes. Ideally, I'd wait until my Wednesday and Friday broadcast, maybe until September, maybe even until the October, but I'd listen to my weekly broadcast at the very least. The analysts still think there's more upside, and there you go. You would essentially decide your time frame. Is it 12 months? If it is, then a little fall is to be ignored. If, however, you want to trade your investments, which is not necessarily a good idea, then you would sell and buy back later, maybe buy back in October. But if you're just an investor, so you've got to know who you are and what you're doing and what your risk appetite is. If you're an investor, you just hold on, take the pain. in any event. Now, these both going, well, sideways to upwards. So if you put a gun to my head, would I buy some more today? Yeah, I would, in anticipation of it going up to there at least by the end of the year, though I'd be mindful that September isn't good, so I wouldn't be in a mad rush to buy into it. Okay, but it gives you a bit of an idea of what's happening with the markets. And at the moment, we're certainly not looking in a rabid bull market territory like we were earlier in the year. We're looking more at some consolidation rather than falls, I would say. And yes, you might get those falls, which are going to be small in size, is my point. So if you do get the falls, they might go as low as that, but they're not going to go all the way down to here as we have seen in the past. Right, and that's not just because the analysts think it's a buy, but simply because the momentum for falls isn't there. It is not like this. It is more like this. It is more like this. More like this. And do you see whenever that happens, the falls are small before it rises. Small, rise, as opposed to big, right? Which is what happens when the monthly is falling, and so is the weekly. Okay, so you've learned something. Nothing's guaranteed, so don't have a heart attack. 21% is what the analysts think is the upside. Okay, Amazon, similarly, I hold it, as I do the others, and I'd continue holding them. But were I a different person and more risk averse, I might say, well, I'll sell 10% if it drops 10% from the highest it's been, 20% if it drops 20% from the highest it's been, and so on. But I am not a different person. So for me, what's suitable might not be for others. But on the whole, would I buy more today? Well, if I was in a rush, otherwise I'd wait till my broadcast on Wednesday or Friday. And why would I wait? Well, because that could fall. So why don't I sell? Because I don't trade my investments. Oh, okay. So that gives you an answer for every scenario and every kind of investor very clearly as well. Disney, how awful is that? Now, don't go and buy this just because it's at 2020 levels, which is what some people sometimes do. And just because when it was there before, it did this. And it did this. Don't buy it for that reason. That's not good enough reason, or because that's what the analysts say. Just be warned about that. It's a good, useful lesson of sometimes things just take a lot longer, and I'd rather wait on this one than panic, do anything else, okay? And even if the analysts think it's got that much upside, I wouldn't buy more today. Nvidia, now I've described this constantly since we instructed you to buy it back in January, which was that if you are risk averse, you would sell between 10 to 100% of it because you've made a lot of money. If you're risk loving, you hold on to it. Would you buy more today? Well, you bloody missed the boat, haven't you, for a while? If you're risk loving, you might buy more today because it is overbought. So you'd have to be pretty risk loving to get in now. We got in back over here, okay? And that's where we are with Nvidia, though the average analysts think there's a lot of upside to go. And Tesla, nice little upward trend. It will most probably do this, and so if you own it, you hold on to it. Would you buy more? Well, you're anticipating that kind of a move, and you should be okay with it. So there's your Tesla. What about your Meta? Well, it's fallen off that upward trend. Now, how deep's that fall going to be? Is it to here, or is it to here, or is it to here? Well, if it's Michael Burry and Jeremy Grantham, they think it's up to here. It's going to fall. That's what they think. They think it's going to be the mother of all crashes, and the world's going to come to an end. I suspect it's going to be closer to this circle I'm drawing here, so, somewhere around here. So we're near the bottom of it. Why? Well, I'm anticipating this to continue falling. Okay, and when it's done that in the past, it's taken a while to get to the bottom, all right, before it rises up. But because as long as this MAC doesn't fall with it, then you're not going to get the sharper falls. And I suspect what will happen is this will do this and then move up. So as long as it doesn't cross its own signal line, you might say blah blah blah, bubble-de-goop. Well, it's worked in the past, and just look at pattern recognition previously for this, and we even asked ChatGPT on this, and it said what I'm telling you anyway, only confirmed what we knew already, which was it can't guarantee the future on it, but yes, there is some merit in pattern recognition. There we go. Meta. Okay, 26% to the upside is what the banks and the analysts think. ServiceNow, very similar to the previous one, so I won't sort of harp on too long about it. Lots of buys, and I anticipate that, like with Meta, will not cross below its signal line here on the monthly, so the dotted blue, but it will actually rise up, and although the weekly will fall, which is what's leading this to drop, should start resuming upwards thereafter. And that might be all the way into October, because September tends to be a negative month for ServiceNow. So would I buy more today? Probably not today. I'd wait and listen to my weekly broadcast on my Telegram channel on my YouTube channel. Okay, ServiceNow. Cisco. Now, this is a really good one because this tells us several things. And before I tell you that, there's a lot of scammers out there pretending to be me. I never direct message you and certainly don't ask you to invest into crypto or whatever. So just be careful. alpeshpatel.com/links. That's what you need. So let's get to Cisco. Now, this is a reminder that even if the broader markets are falling, there are still opportunities out there. And we're going to continue looking for those and provide them for you when we find them. But I anticipate this to go in this direction. You can see it's made a 52-week high there as well, and that's what the forecast for it was. That's what the analysts think, and actually October and September are not too bad for it either. So there are some limited opportunities out there as well, and I'll continue giving those on. Well, you can either look at campaignforamillion.com or have a look at alpeshpatel.com/links. Okay, thank you. I hope you found that instructive. For those of you who are on the Great Investments Program, you want the full-blown 20-minute version of this, which goes through a lot more stocks, and that's on the private channel that I have on Telegram, okay? And for everybody else, YouTube and so on for this. Thank you all for listening.